Good evening, everyone. I welcome you all on behalf of WRC of ICI. This is the last discussion, last sector of GST Sectorial Series Part 1. I hope you guys have enjoyed all this series and all the discussions. We would love to hear from you. So whatever feedback you have, please do give after the session. We are also coming up with the next series, which is starting from the next Thursday, Sectorial Series Part 2. It's already there on WRC website, and I'm sure you must have received email and messages also about it. So I request everyone that please enroll for that also, and then once Part 2 is over, we'll come up with the Part 3. So the idea is to cover all the aspect of GST specifically from in each sector wise, so we will know all the issues and a prospective solution, or if not the prospective solution, a perspective to deal with the issues. So this is the idea of GST sectorial series. And with this, today we have our renowned speaker, none other than Naresh Sheth. Whenever the name of real estate comes in mind, we always reach out to Naresh Bhai, and he's always available to WIRC. So Naresh Bhai is a chartered accountant practicing since April 1982. He's a regular speaker in seminar, conferences, workshop, and various refresher course organized by ICI also and other associations also. He is author of service tax publication on real estate sector, 3 editions published by Bombay Chartered Accountant Society, regular contributor to the indirect tax segment of annual referencer of WIRC, a visiting faculty for NASIN and certified accredited GST trainer, a regular contributor of article in various professional magazine. He is member of Indirect Tax Committee of BCS, chairman of Indirect Tax Committee of CTC for the year 1718 and 1819, presently core member of Indirect Tax Committee of CTC, special invitee in Indirect Tax Committee of ICI for 1617 and 1718. He has practiced as a proprietor as a Messrs. Sheth and Company up to 2016, and after that, since then he is a partner of Anesha Associate LLP. So with this brief introduction, we welcome you, Naresh Bhai, for your deliberation.
Yeah, thank you, Gautam. Thank you very much. So shall we start?
Yes.
Yeah. I'm just starting the slideshow.
Yes, sir.
The slide is already shared. Start slideshow. I think you have to click over here. Just click over here. Yeah, Ganesh. Just click over here.
Yes, sir. Perfect.
Okay. Yeah. I think the screen is visible, correct?
Yes, sir.
Yeah. So friends, as Gautam has said, this is the last session of the, your sectorial series number 1. And I have been given 2 hours to deal with this particular topic. It's a very huge topic. So just to begin with, what I've decided, I'm dealing with the real estate taxation scheme, which is in effect from 1st April 2019. Friends, as you all are aware, the real estate taxation scheme has thoroughly revamped from 1st April 2019. So I've decided that I will do only that, so that the members get the benefit of the present taxation system rather than going into the historical thing. So this is my first caveat. So because otherwise the time will be very short. So now, friends, before starting, I would like to deal with 2 very recent judgments which is affecting the real estate sector, and you must be getting lot of queries from your client, or lot of the questions from your client on these 2 particular judgments. And what call that we have to take as a practicing chartered accountant or practicing GST consultant for this particular on the basis of this particular judgment. Because nowadays, in the era of WhatsApp, in the era of Facebook, WhatsApp, Instagram, or lot of publicity, lot of magazines, so the people, clients, reading that, having the half knowledge, they come to us and they ask so many things, and perhaps we have to tell them the real, because they come really without going through the judgments or without understanding the judgments. So friends, I've decided to deal with two particular topics, two particular judgments, so that we can deal with our client in an appropriate manner. The first judgment, Honorable Orissa High Court in the case of Messer Safari Retreat Private Limited. See, what was the case in this particular, what was this case is all about, I tell you. The developer was constructing a mall for, not for selling it, but for, giving the shops on leasing or letting it out. So the case of the developer was, he has spent huge money on the goods and services for construction of the shop, and he had a huge input tax. So he wanted to take the credit of it. So friends, as you are aware, we have section 17(5)(c) in the CGST Act, which blocks the credit of the works contract services used for the construction of an immovable property. And we have section 17(5)(d), which blocks the credit of goods and services used for the construction of a property on own account, OWN, on account. So I think this was the section, and definitely our understanding is always is this, that if you are constructing the immovable property for your own account, on your own account, you are not eligible for the ITC credit. You are eligible for ITC credit when you are intending to sell it under construction. Otherwise, you are not allowed. This is the general, the understanding of all the practitioners. The 17(5)(d) blocks the credit of input services or goods used for construction of an immovable property which you are not intending to sell. So this was the case. So what has happened? The Orissa High Court had taken a very, very, sort of pragmatic stand on this. Very pragmatic stand. What the Orissa High Court has said, very purpose of the GST is to make uniform provision for levy and collection of the tax and to prevent the multi-taxation. While considering the provision of section 17(5)(d), narrow construction of an interpretation put forward by the department is frustrating the very objective of the Act. The Orissa High Court said that basically this is a tax on a value addition. And if you are not allowing the input tax credit, then you are inviting the multiple taxation, multi-taxation. So this basically frustrates, if you put this kind of condition, it frustrates the basic objective of the, the GST Act. Further, the court said, if the assessee would have disposed the property before the receipt of completion certificate, he would have entitled to, the input tax credit. So if he is providing the output services in the form of construction services, he is entitled to credit. Here also he is providing the renting services. He is paying the output tax. He is paying the GST on output side. So what is the justification on not granting this particular credit? So, and court has said one very, taken one observation. Court has made one observation. Okay, here the assessee is retaining the property, but it is not using for his own purpose. The court said it is not using for his own purpose. It is basically letting it out. So it is basically not on his own account. He is not constructing on his own account. He is constructing, it's not for own purpose, but it is constructing for, letting it out. So if somebody else is going to utilize it, and he'll be paying, this gentleman will be paying the tax on the output side. So court said the provision of the section 17(5)(d) should be read down. If we read it in the manner it is given, it leads to some weird result of blocking the eligible credit. blocking the credit, which is again the spirit of the law. So it has to be read down, and one has to keep in mind very purpose of the very purpose of this credit mechanism. So in short, the Justice Javeri was the judge deciding this case. He has taken sort of the purposive interpretation. He has taken the purposive interpretation. He has not taken the literal interpretation of this particular provision. But friends, we have to keep in mind the petitioner has challenged this particular provision, and they say he said in the petition that this particular provision is ultra virus. But the court has not debated on the ultra virus as the provision. Court did not held the section 17(5)(d) to be ultra virus. So friends, the Orissa High Court allows the ITC credit which is gone for construction of a mall, because you'll be earning the income out of the renting, so on which the tax will be paid. Friends, this case is very important from conceptual point of view, because you take the case of the construction of a 5-star hotels, 7-star hotels, theaters, cold storage, warehouses, the godowns, even factory premises. Everything, every commercial building will be used to generate the revenue which is liable to GST. So if the principle of safari retreat is held, there will be a great benefit to entire trade and industry. But friends, the government department has filed special leave petition in the Supreme Court, and Supreme Court has admitted this SLP, but Supreme Court has not stayed the order of Orissa High Court. What does it mean? It means the Orissa High Court order as on this date is valid and subsisting. The Supreme Court says, let us review this order and we will decide. Until that point of time, the Orissa High Court decision, in my opinion, is valid and subsisting. So the problem is, we as a practitioners are confronting is now confused. When the client comes to us asking us whether we have to take the credit of this, the expenditure incurred by us on the construction of mall or not, mall hai ya theater hai ya shopping, the cold storage are there, 5-star hotel is there, whether we can take it or not. The problem is the ITC credit is huge, and you don't know what the Honorable Supreme Court will take the position, because there are two clear thinking in the judiciary. The one thinking is go by the spirit of the law, and other thinking is go by the letter of the law. If the provision of the law are unambiguous, howsoever it may be unfair, but you have to go by the literal interpretation. That is the one line of the thinking of the judiciary. They say we are not there to go into the fairness or unfairness of the law. Secondly, there are many number of judgments that input tax credit is your statutory right. It is not your constitutional right. And statutory right can come with the restrictions which the state may impose. It's a matter of policy decision for the state to decide. It's a policy decision. So court cannot go against the policy decision made by the parliament. So this is one line of thinking. Another line of thinking is the same line which our Justice Javeri has taken. So we don't know, Supreme Court, which side the judgment will be decided. What will be the ultimate view of the Supreme Court on this? So what we are supposed to do in this case? Can you tell your client, don't take it? Because I feel that 17(5)(d) is absolutely clear, you can't take it, so you don't take it. Other view is you take it. because the Orissa High Court judgment is valid and subsisting today. But suppose if that Orissa High Court judgment is reversed by the Supreme Court, then what? You will be, required to repay the ITC taken by you. If you utilize the ITC, then the interest will have to be paid. Definitely penalty will not be leviable because it's a matter of interpretation. But friends, this is the issue. If you say the client don't take it, and after 2 years or 3 years, if the Supreme Court says it is allowable, then your client is remediless because they can't claim the ITC credit after 2-3 years. It would lapse. So in this particular situation, what should be the practical view or what should be the practical advice you and me should give it to our client? See, I will not hesitate to tell you that our office has taken the position. We are telling the client, kindly take the credit, intimate your jurisdictional officer saying that based on the Orissa High Court judgment in the case of Safari Retreat, we are availing this ITC credit and don't utilize the ITC credit. You keep it on your electronic credit ledger balance. And if the judgment comes in the favor of Safari Retreat, Honorable Supreme Court decides in the favor of Safari Retreat, then in that case, that becomes your, valuable rights and you can utilize that. And by chance, if Supreme Court, decides against Safari Retreat, you may have to reverse the ITC. There will not be any consequences because there will not be any interest because now the law is very clear. Only where there's a short payment because of the utilization of the ITC, you are supposed to pay the interest. So if you are reversing the ITC without utilizing it, there will not be any issue whatsoever. So I think this is my view as far as Safari Retreat is concerned. As far as second judgment is concerned, this is Honorable Gujarat High Court in case of a Munjal Manish Bhai Bhatt. See, this case was, this particular Mr. Munjal had bought a bungalow property, had booked the bungalow property from some Navratan developers. And the agreement was like this. The builder has made one agreement wherein he says, okay, I am selling the land for this amount and then I'll be constructing bungalow on that for this amount. Suppose the total value of the agreement is 1 crore rupees. He says 70 lakhs rupees I am charging for the land. I'll be conveying you the land and 30 lakhs rupees I am charging you for the construction. And while demanding the GST, what this builder has done, and every builder does that, he says the total value of the bungalow is 1 crore rupees, 30 lakhs plus 70 lakhs, 1 crore rupees. So pay me the GST of 5 lakhs rupees. So this particular REIT was filed by Mr. Munjal not against the government of India or government of Gujarat, or not under against the GST department. He has filed against the builder. He said builder can't charge this 5% GST to me because he can't charge, he can't add the value of the land while determining the construction services. So this was a brief issue. So what has happened? What Gujarat High Court has said, Gujarat High Court has upheld the contention of the Gujarat High Court has upheld the argument of Mr. Munjal. And what Gujarat High Court has said, Gujarat High Court has read down the paragraph number 2 of notification number 11 by 2017, which says you add the value of the land for calculating the construction services and give the 1/3 rebate. So friends, in given case, if the value of the land is 70 lakhs rupees and total agreement value is 1 crore rupees, then the deduction is only 33.33 lakhs is given to the assessee. It means against the land of 70 lakhs rupees, he is getting the rebate of only 33.33, it means he is paying the extra tax on 37.37 lakhs, because this is the value of the land that is getting taxed. And the argument was that okay, it is not within the central government competence to tax the land under the GST. So the court has accepted this argument, and court has said that court observed that mandatory deduction of 1/3 for the value of the land is not sustainable in case where the value of land is clearly ascertainable, or where the value of the construction services can be derived with the valuation rule. So friends, if you go to the valuation rule, it says very clearly that the cost of provision of services, whatever cost you incurred for the construction and relating to the construction, bole to, cost of the construction, then the approval fees, then architect fees, all direct expenses incurred for the construction. The bill, the service provider has to add 10% markup on that, and that will be the value of the construction services. The court has said you can tax only up to that extent. So this was the particular case in case of Manish Munjal. So the issue comes up here, whether can we apply the decision of the Munjal Manish Bhai's case to the constructions which usually takes place in the Mumbai or in Navi Mumbai or many of the metro cities, wherein the construction is done on the procurement of development right or leasehold rights. Please understand, in city like Mumbai, the construction is not done on the virgin land. Means, the land is not conveyed to you. Here in the case of Manish Munjal, the land was separately conveyed, or there is a separate land was there. But here in Mumbai, the builder does not buy the land. He does not take the conveyance of the land. He just acquires either the development right on which he makes the construction, or he acquires the leasehold right in the land, and he does the construction. So friends, can we apply the decision? Is the decision of the Gujarat High Court directly applicable to this? In my view, this seems to be a difficult proposition, because here there is no value of the land. See, please understand, builder is not selling me the land or conveying the land to me. He is incurring the expenditure like any other expenditure. For example, expenditure of the construction, expenditure of architect fees, expenditure of approval. Similarly, the development rights and leasehold right is also an input services. So basically you cannot equate it with the land. So in my view, one should not really, it will be very, I personally feel that it will be difficult proposition to apply the Manish Munjal case ratio to the constructions done in the Mumbai by utilizing on the basis of the development right agreement or the leasehold right, by acquiring the leasehold right. And please understand, to the best of my knowledge, I think earlier there was a Maharashtra Ownership Flat Act, we called it MOFA, and now there is a RERA also. And I don't think this particular law permits builder to show the value of the land separately in the agreement and the value of the construction in the agreement. And please understand one thing, that when ultimately the society is formed, the conveyance is done in the favor of the society. The owner of the land will be society and not the flat owner per se. So in my view, it might be difficult for us to say that Gujarat High Court judgment of Munjal Manish can squarely apply to the case where the construction done by utilizing the development right or by utilizing the leasehold rent. And friends, again, rest assured that definitely this judgment, the decision of the Gujarat High Court will also be challenged by the department in the Supreme Court. That is there. That will be, definitely, because the time for filing SLP has not yet expired. It in all probability, it will land into the Supreme Court. And please understand one thing: the decision given by one of the High Court has a persuasive value for other High Court. But one cannot go as a matter of right. Suppose in the Bombay High Court, you cannot say, since the Gujarat High Court had decided this, this has become the law. No, every High Court will take their own particular, decision. Maybe Gujarat High Court judgment will have the persuasive value, but you cannot, as a matter of right, say that it is binding on the High Courts of other state. So, friends, Manish Munjal case, at least we have been telling our clients, don't take these chances. And again, see, on the commercial basis also, if you don't charge the GST on this to the customer, and these matters will be decided, it takes a very long time in our judicial system. These kind of decisions take many years. And when the judgment comes, and if it is adverse, at that time, you as a service provider, builder as a service provider, will have to discharge not only the GST, but also the interest on that. That will be very, very, costly affair, and you will not be able to recover it from the customers. So, this will be my view as far as Manish Munjal is concerned. Now, friends, what I'm trying to do, I'm discussing the GST honor after 1/4/2019. See, as I told you, the government has come out with notification number 3, 4, 5, 6, 7, 8, 9 on 29th March 2019. These notifications were effective from 1st April 2019, which has changed the complexion of taxation of a real estate sector. So let's see, I'm summarizing what are the impact of this notification. Friends, on 1/4/2019, the builders will have the ongoing projects, because there will be definitely ongoing projects. So what government has done, government has given the option to the builders. Either you continue the old scheme, or you opt for a new scheme with effect from 1/4/2019. If you opt, 1/4/2019, new scheme means concessional rate of tax without ITC, and old scheme means whatever the earlier scheme was there, you are getting the ITC, you continue it. And friends, the reason for this was, before GST came, before 30th June 2017, the flat buyer was paying 4.5% service tax and 1% VAT in the Maharashtra I'm talking of. So 5.5% was the ultimate incidence of tax on the customer. When the GST came, the rate of GST was 12% on the under construction residential flat or commercial flats. So there was a huge hue and cry. There was a difference of 6.5%. If you are buying the flat of 2 crore rupees, you are paying extra 13 lakhs rupees by way of a GST. So there was a huge hue and cry, and the government said, no, but builder will give you the ITC credit that will set off, your incidence. But that was not happening. In fact, the ITC was not that high. ITC was never high, 6.5% of the value of the agreement. And many of the builders were not passing on the ITC to the customer. So the government thought of, very clear thing. Okay, we are bringing the rate back to 5%. but we will not give the ITC. So this was because ITC builders are not passing on to you, so we will not we'll withdraw the ITC. This was the whole scheme. So the government has given first two options for the ongoing project. कि भाई आपको ongoing project में रहना है, so you opt for that. If you are not opted for it, or you can opt for the specifically for the new scheme, or even if you are not opted for new scheme, the new scheme will be applicable to you. So now let's go to the what was the tax implication? What are the tax implication after 1/4/2019 on ongoing projects opting for the old scheme? Because there are many ongoing projects till it is continued. So what was this? What is the tax implication of that? Friends, I am again repeating. This slide is for a developer who has opted for, he says, can stick to the old scheme till this project is completed. So what are the implications of this? And please understand the option is to exercise project wise. If I am making the 3 projects, I can say that for 1 project, I will go for the old scheme. For 2 projects, I will go for the new scheme. So now this is, what will be the tax implications on or after for ongoing project opting for old scheme. Number 1, the sale of under construction residential affordable apartment. It was taxed at 8% earlier. So whether now it will be taxed at 8% or 12% with ITC, 8% with ITC. But the slight doubt is now, raised after this amendment in the rate notification. The way in which rate notification is drafted, it appears that in case of a residential affordable housing, if you are opting for 8%, you may not get the rebate of the land. That is perhaps, drafting error. But, in my opinion, it is a drafting error. But if you read it plainly, it appears that the rate of tax could be 12%, but with ITC. The sale of under construction residential units other than affordable apartment is 12% with ITC. Means you have to charge, you have to pay 12% to the government, and you can claim the input tax credit. Sale of under construction commercial units, no change at all. It's a 12% with ITC. And sale of completed flats or completed units, completed commercial units, post OC, definitely there was no tax, it was a nil. So these are the tax rate, means higher rate of tax, old same rate of tax, but ITC is allowed to you. So what is, what are other features of this scheme? Other features. Whatever accumulated ITC you are having on 31st March 2019, that remains intact. It means you can utilize it after 1/4/2019 also for the purpose of discharging your output tax liability. And again, even after 1/4/2019, whatever inputs or input services or capital goods you procure for the project, you can avail the ITC. And you can discharge your output tax liability from the, this ITC balance. There is no condition to procure 80% of input and input services from registered vendors. Please understand that. There is you can, there is no restriction on you. Okay, you have to purchase it from the registered vendor or anything. And no stipulation. See, under the new scheme, there is a stipulation. Okay, if you are procuring more than, less than 80%, then on shortfall, less than 80% from the unregistered person, then on the shortfall, you have to pay the tax under RCM. But though there is no conditions whatsoever under this particular, if you opted for this old scheme. Now I'm going to the, if somebody has opted for a new scheme, or he has not opted for old scheme, then automatically the new scheme applies. And any project which commences on or after 1/4/2019, what will be the tax implications? I am summarizing it. Sale of under construction residential affordable apartment including houses under the specified scheme. Specified scheme बोले तो राजीव आवास योजना, जवाहरलाल नेहरू आवास योजना, प्रधानमंत्री आवास योजना, etc., etc., etc. Credit link scheme, subsidy link scheme, etc. All these schemes, the rate of tax will be 1%. Please understand, the rates of tax will be 1% without input tax credit. And whatever tax 1% is payable, you have to pay in cash. You cannot utilize your ITC balance. Sale of under construction residential units other than affordable apartment. In that case, the tax rate will be 5%, that 5% without ITC. And you have to discharge your output tax liability from the cash only. The sale of under construction commercial units. See, sale of under construction of commercial units in RREP. RREP means residential real estate project. Residential real estate project means, you have a complex where your commercial area is less than 15%, then you are treated as an RREP. Residential real estate project. Because if you are constructing a big complexes, you have to have necessary certain shops and etc. in that complex. So the government has allowed 15%. If your total out of your total construction, if the 15% of the area is commercial, that entire project is being treated just like a residential project. And even if you are selling that commercial portion there, if you are selling the offices or shops in that RREP project, the rate of tax is 5% for that commercial units also, and it is without ITC. You can't claim the ITC, but you have to discharge your output tax liability in the cash. Now, sale of under construction commercial units in REP, real estate project, it means you can have a composite building wherein your commercial area is more than 15%, and you have also residential area also. So at what rate you will discharge the ITC, what rate you will pay the tax on the commercial area? It's a 12%. 12%, but you can claim the proportionate ITC. Suppose your building consists of 30% of the commercial area, so at least 30% of the ITC in respect of that building you can claim it. And how to discharge this liability? You can discharge it from cash also and from credit also. It means whatever commercial unit that you are selling, you have the option to either pay the cash, discharge the liability in cash, or you can discharge the liability from the ITC balance also. But when you are paying the tax, when you are balance residential units, you'll be selling at 5%. So that 5% liability cannot be discharged from the ITC ledger. It has to be paid in cash only. You may construct entire exclusively commercial complex. Then what? Then the matter is very simple. You pay the tax at the rate of 12%. You will get the ITC. Entire ITC you will get, and you have got a right to pay discharge the tax liability from the ITC credit ledger, or you can discharge from the cash also. And under the new scheme also, sale of completed flat or sale of a completed commercial units post OC is not at all liable to GST. That is nil. There is no liability as far as the sale of completed flat or unit is sold. So, but these concessional rates comes with two conditions. First condition, builder is not entitled to ITC in respect of the services tax as a concessional rate. See, what was the intention of the government? That 5% rate we are charging, we are getting on the output tax. And whatever the builder will buy, on which he will be paying the input tax, on that, whatever input tax is paid, he is not getting the credit. So that input tax also comes in the kitty of the government. So ultimate government is getting, see, whatever government was getting earlier, or maybe less, but they are not losing much revenue. So this was the whole condition. So you are not allowed the ITC credit where you are paying the tax at a concessional rate. But government has said, if you are taking the concessional rate, you have to procure 80% of your, of your goods or services for the project from the registered vendor. Otherwise, what government apprehension was, people will take the paid output tax at 5% and they will buy the material from the unregistered dealer, and there will not be input tax coming to the government kitty. So that's why they have said that a mandatory procurement of 80% from the registered person, means shortfall of 20% is allowed, and if the shortfall goes above 20%, then the developer has to pay tax on that shortfall under reverse charge mechanism on the completion of the project. I think these are the scheme I have explained you broadly. Now let me come to the issues. What are the issues in the new schemes? First, the very first question is whether the new scheme of taxation is optional or mandatory. If somebody want to say that, okay, boss, I don't want to go for that, 5% or 1% scheme. I'm very comfortable with the old scheme. Can he go with that? That is the first question I am putting it to you. Second question, whether the ITC benefit granted by the statute can be withdrawn through the rate notification. See, this new scheme has come by way of a rate notification, notification number 3 by 2019, which forms the part of notification number 11, which is a rate notification. So can by rate notification, you can withdraw, you can take away by substantive right of the ITC credit. That is the first thing, And the main question is, if you read the rate notification, it says okay, the rate will be 5%. Means rate is 7.5%, and 33% is abatement, so it comes to 5%. But that rate, provided you not claim the ITC. So the view is this particular rate notification is a conditional. If I not claim ITC, then I'll be charged 5%. But if I claim the ITC, I am not eligible for that for 5% concessional rate. So this is also one of the interpretation, and it says okay, in that case the scheme is not mandatory. It's option up to me. If I claim ITC, then in that case I am eligible to charge 12% and take the ITC. So this is what the controversy is all about. And the one controversy, whether the ITC, see the people say, okay, why my ITC benefit should be taken away. See, I'm giving you one example. See, in some cases, ITC scheme will be beneficial to the builder. Take the example of an affordable house. The selling rate is a 5,000 rupees per square feet. And suppose okay, the rate of tax, see, suppose I'm not taking affordable house in a house. The rate of tax per square feet is 5,000 rupees. GST rate, GST 12%, so 600 rupees is my output liability. My construction cost for constructing that house is around 3,000 rupees per square feet, and I am getting 18% ITC on that. So I am getting 540 rupees is a ITC. So my net tax incidence as a builder is only 60 rupees. I am collecting 600 rupees from customer I am, 540 rupees, I am getting the ITC credit. So my tax incidence is only 60 rupees per square feet. Under the new scheme, if you calculate 5,000 per, I am paying 5% tax. So 250 rupees is my tax output tax incidence. And my construction cost is 3,000 rupees. On that 18% I am paying. So 540 is my input tax. So total tax incidence is a 790 rupees. In earlier case, my tax incidence was 60 rupees, and now my tax incidence is 790 rupees. So I am paying extra additional tax incidence of 730 rupees. So ITC credit scheme is beneficial for me. So why I should go for that 1% or 5% scheme? That was the issue. And whether any project which starts after 1/4/2019, is this scheme is mandatory? That was the question. So friend, let me start with first, the new scheme which started after 1/4/2019. The government has come out with the FAQ. See, when this new scheme has come, the government has come out with two FAQ. One is FAQ dated 7th May 2019, and other is a FAQ dated 14th May 2019 to explain this entire scheme. And the FAQ number, first FAQ of 7/5/2019, there's a para number 4, which says construction of a residential apartment in a project commencing on or after 1st April 2019 shall compulsorily attract the new rate of tax at 1.1% and 5%. So as per government FAQ, the new scheme is a mandatory. But what is the legal answer to it? The legal answer to it, this particular scheme is basically optional. If I claim ITC credit, then I am not going into 5%, 1% scheme. It is not other way around. If I take 5% or 1%, I cannot claim the ITC. It is other way around. If I claim ITC, then I am not eligible for 5% or 1%. So the friends, the people say that still we can go for old scheme if we want. However, see, this is the one thing. And secondly, the second question is whether the concessional rate prescribed is, whether, the ITC granted by the statute can be withdrawn through the rate notification. This is very, very important question. Very, very important, very, very important point. Because ITC is a heart of entire GST mechanism. And section 16 gives you the right to claim the ITC. And section 17 blocks certain ITC. So this particular restriction of claiming the ITC is not coming out of the section 17. It is coming out of the notification. So the right which has been given to me under the Act, can it be taken by way of a notification? Can it be taken back by the notification? This is the particular, the issue. And friends, the similar thing has happened in case of a restaurant sale. Even in the restaurant sale, the issue was, earlier they were allowed to charge 12% or 18% and they were allowed ITC credit. And one fine day, government has come out with the notification 5% without any ITC. So there is, the Hardcastle Restaurants Private Limited. That Hardcastle Restaurant means the people who are running the McDonald's chain. They have filed a writ petition in 2019 in Ahmedabad High Court challenging this particular rate notification. And what was the ground of that writ petition? That same ground applies to our construction industry also. No authority under the law to restrict the ITC. They say the ground of the writ, no authority under the law to restrict the ITC through the notification. They say, where is the provision where, So one can restrict the ITC through notification. Government cannot restrict my ITC. ITC is my substantive right. It cannot be restricted through the notification. Notification number 3 grants a concessional rate of tax where ITC is not taken by the assessee. It is a conditional notification. It does ban the claiming of the. It does not ban the claiming of the input tax credit. Please understand. It says if you claim it, you will not get it. But they does not ban you from taking the credit. So claiming or non-claiming of the ITC decide the tax rate. It is not other way around. The tax rate decides. Tax rate has to decide claiming or non-claiming of the ITC. If the legislative intent was to ban the credit, they should have done through the section 17 for blocking of the credit. The mandatory rate without ITC is a presumptive scheme. See why this entire thing has come. The government was feeling a restaurant is not passing on the ITC benefit to the customer. The builders were not passing the benefit of ITC to the customer. So they will presume certain the ITC will be this, ITC will be to this extent. So they will reduce the output rate and they will disallow the ITC. So it is basically a presumptive scheme. And the presumptive scheme of taxation cannot be thrusted on the assessee. It should be optional. It should be optional. Any scheme, any presumptive scheme of taxation cannot be mandatory. It has to be option. Assessee should be given an option to follow the normal scheme of taxation or presumptive scheme. Non-granting of an option to follow the normal scheme of taxation amount to the thrusting of the presumptive scheme of taxation of the assessee, which is bad in law. So this is what the ground were there. So then such rate regime is discriminatory in the nature and violative Article 14 of the Constitution. Because Constitution gives me right, to do my, there should not be an obstacle or there should not be discrimination. Why should I be, not allowed the ITC while other industries are getting it or other players are getting it? So this was something, such rate regime obstruct the freedom of the trade or business and hence violative of the Article 19(1)(g) of the Constitution of India. This article gives a right to carry on the practice of profession, occupation, and trade of the business. Why this kind of putting this kind of conditions? My trade is getting hampered. My business is getting hampered. So it is in violation of Article 19(1)(g). And again, denial of the ITC credit results into the cascading effect of the tax. And friends, if you remember, we have, the rent-a-cab services. We have GTA services, where the government gives you both the option that if you want to, if you want forward charge, then 12% is rate. You don't claim the ITC, and if you want, otherwise you 5% tax without ITC. In the rent-a-cab, in a GTA, both the options are given to you, whether you want to follow the scheme without ITC or with ITC. The government should have given that particular choice over here also. So friends, in my view, the scheme should be really the optional, and the benefit given by the statute under section 16 cannot be withdrawn by way of a notification, that too by way of a rate notification. Now another issue comes up very frequently, whether different options can be exercised in different building in the same plan layout. See, this option has to be exercised project wise, and project means project as registered under the RERA, and the RERA gives you the option in a one plan layout. If you have a different building, you can have a separate RERA registration for each building. So if you can have, see, you can go for a different option for a different building, even in the same plan layout. So there is no difficulty over here. Suppose in two buildings you will say that I will go for the old scheme, and one building you will say I will go for the new scheme, depending on your ITC accumulation and other factors. Now in weather, see in Bombay, city like Bombay and other cities, generally construction is done under the JDA, Joint Development Agreement. There will be landowners, there will be developers, and both will be sharing the area. And landowner will sell his area and builder will sell his area. And in case of a landowner, what happens? He doesn't have any ITC credit because he gets, in lieu of his land or development right, he gets the ready-made flat. He gets the flat from the developer. He doesn't do the construction. He doesn't incur any expenditure. So he doesn't have the ITC. So he would like to go for 5% tax. And here the builder, developer will have a lot of ITC. So he may have to go. He would like to go for that, the 12% scheme with ITC. So the question arises in this kind of situation, building is one, but assessees are two. Whether that both the assessees can opt for a different scheme or not. Friends, the FAQ, second FAQ of 14 May 2019, the question number 1, they say they are not giving any straightforward answer. They are giving, answer in a roundabout manner. What answer they given? The legal and operational harmony necessitates that both landowner promoter and the developer promoter exercise the identical option. They say for the legal and operational harmony, but there is no ban under the act. Both are different assessees. Both have to exercise their option. So in my view, again, please understand very clearly, FAQs are neither binding on the department nor on the assessee. And in case of an inconsistency between the FAQ and the express provision of law rules notification, the legal position as prescribed in the law, rules, or notification will prevail. So FAQ does not have any binding. Even if you read that FAQ itself starts with an initial remark that FAQ does not have the force of law. In case of a conflict, the Gazette notifications which have legal force shall have the precedence. So don't give much credit to the FAQ. FAQ also says it is for the operational harmony and legal harmony, etc. But under the law, both the developer and landowner can go for two different options. One can say I want to go by 5%. Other can say I want to go by 12%. Both can do that. There is no issue as far as the law is concerned. The law is very clear on this. Secondly, one of the important questions that usually comes to us, now this, even in your GST audit it will come, whether the concessional rate apply to the consideration received on or after 1/4/2019 against the installment due on 31/2019. See, because on 30, see, आपने डिमांड लेटर्स रेज कर दिए है, आपका स्लैब सपोज 15 मार्च 2019 को खत्म हो गया, तो 15 मार्च 2019 को you will raise the demand letter on your customers, you pay this much of the installment. On that day, the old scheme was there, the rate of tax was 12%. You would have demanded the 12% from the customer, but the customer gives you the payment, say on the 5th of the April or 10th of the April, when the rate of tax is 5%, and you have opted for 5% as a builder. So will you pay the tax at 12% or will you pay the tax at 5%? That is the whole question is all about. Friends, here we have to go to the section 14 14B2 of the CGST Act. The 14B2 prescribes the time of supply in respect of a change in the tax rate. So what this particular provision says, 14B2 says that in case when the payment is received, in case where the invoice is raised before charge date, means invoice in our case is raised before 31/3/2019. If the invoice is raised before the change date is 1/4 April 2019, uske pehle if the invoice is raised and the receipts are after the change date, it is exactly our case where the demand letter or invoice is raised before 31/3/2019 and payment I have received after the change date, that is 1/4/2019 के बाद में मिला है मुझे. So which rate to apply? So they say invoice is raised where the invoice is raised before change date and the receipt after the change date. The time of supply is a issue of invoice. So friends, in that case, in this case, you cannot pay the tax at the rate of 5%. You have to pay the tax at the rate of 12%. And reverse case, somebody has paid you money in advance on 31/3/2019, but you raise the invoice after 1/4/2019. Suppose आपका slab 5 तारीख को complete और 5 अप्रैल को complete होने वाला है, but the customer is going out of India. He has given you the check कि मेरा installment ले लो, 15 मार्च को ही ले लो. So in that case, what is the law position? So we have section 14B2, point of taxation. It says if the payment received before the change date and invoice is raised after the change date, then also the time of supply is a issue of invoice. So friends, here also the time of supply is a issue of invoice. Why the government must have done it? Because government always feels कि भाई जनरली रेट बढ़ता है तो इसके लिए invoice का date रख दो. But here in this case, it is reverse actually. So here the law says it is invoice date. So friends, in that case, though you received the money before 31/3/2019, but the invoice for that is raised after 1/4/2019, in my view, you have to pay the tax at the rate of 5% and not the 12%. This is the situation. Friends, now I'm coming to affordable residential apartment. Friends, while discussing earlier, I told you the residential apartments are divided in two parts. One is a affordable residential apartment where the rate of tax is 1%, and the apartment other than residential affordable residential apartment where the tax rate is a 5%. Correct? So now what is the affordable apartment? See, affordable apartment owner after 1/4/2019 is where these apartments are in the metropolitan cities like Bengaluru, Chennai, Delhi, NCR. In Delhi, NCR includes Noida, Greater Noida, Ghaziabad, Gurgaon, Faridabad, Hyderabad, means other city, Hyderabad, Kolkata, and Mumbai. Mumbai means includes all their satellite cities. All the satellite like Thane, Kalyan, all the things will be covered over here. If these houses are in these particular metropolitan cities, then houses having the carpet area up to 60 square meters is 644 square feet RERA carpet, and having the gross amount up to rupees 45 lakhs. It means dual condition. The flat should be not more than 644 square feet, and the value of the entire flat should be 45 lakhs or less. If you are satisfying these two conditions, then your apartment is an affordable residential apartment and you can charge 1%. In non-metropolitan cities, the monetary limit of 45 lakhs remains same, but carpet area goes up to 90 square meters, it means 968 square feet. So in other than metropolitan cities, take example like Baroda, Ahmedabad, Surat, they are non-metropolitan city as per this definition. There, even Pune, Nagpur, Satara, Sagli, Kolhapur, everything comes under the non-metropolitan cities. There, if your area of the flat is 968 square feet or less, and the value is 45 lakh rupees, you are an affordable house. And there is one more condition. And there is one more apartment also. Suppose you were an affordable house prior to 31/3/2019. See, prior to 31/3/2019, there was no monetary limit. Only limit was the area wise. If you are having the 644 square feet flat, irrespective of the value, if you are having a 644 square feet flat in city like Mumbai, though its value may be 2 crore rupees, 1 crore 50 lakhs rupees, 1 crore rupees, but then also it was an affordable housing. And you are entitled to pay the tax at the rate of 8%, again the 12%, with ITC of course. So, there were so many ongoing projects like this. So government has allowed for this kind of a project, if you have exercised the option that I want to go for the 5%, the new scheme of 1% without ITC, it was allowed to you. Or if you have not exercised the option of continuing in 8%, then also you are automatically coming in the affordable apartment. So this is the definition of the affordable apartments. Am I clear? Area, as far as new projects are concerned, the area of 60 square meters in a metropolitan region, metropolitan cities, or 90 square meter in a non-metropolitan cities, but the cap of 45 lakhs rupees, value of 45 lakhs rupees. An ongoing project, which was earlier affordable houses, where there is no limit, but because of that, that flat will be more costly, it was costlier, that doesn't cease to be affordable apartment. It will still continue to be affordable apartment if you opted for the new scheme, or you said, I am not applying for any scheme, I am not continuing with the old scheme, then also you are automatically falling in that 1% scheme or 1% scheme. So friend, this is the definition of affordable apartment. Now the question comes, what is to be included for determination of the threshold value of 45 lakhs rupees? The affordable apartment is defined under the notification 3/2019, which is clearly says whatever consideration is charged for the construction services, and if you are charging separately for the land or undivided share in the land, that is all to be included for the purpose of calculation. So the value of the land, value of the flat along with the undivided share in the land, if that is both has to be considered. And on top of it, if the builder has collected the development charges, parking charges, preferential location charges, or common facility charges, like I will say I am collecting swimming pool, I make swimming pool, to uska charges itna, I am constructing clubhouse, to uska charge itna, I'll be community hall I will be constructing, uska charge itna. All these things, common facility charges, all also to be included, and similar charges. Means any charge which is similar to this, it will be included. Means pre-construction, whatever related to the construction of the complex, all the charges, and making the complex habitable, that all the charges will have to be included for calculating the 45 lakhs rupees. The purpose was builder should not bifurcate, the assessee should not bifurcate his prices into too many things and make that less than 45 lakhs rupees. So this was the purpose. So now the question comes up. Issues are, whether following should be included for calculating the threshold of rupees 45 lakhs. For example, infrastructure charges. I have seen many builder charges the infrastructure charges. Infrastructure charges बोले तो what? आपको अच्छा कंपाउंड बना के देते हैं, कंपाउंड वॉल बना के देते हैं, we put the generator set, we put the DG set, etc., etc., etc. This is infrastructure charges. So infrastructure charge is nothing but a part. It's like a development charges. In my opinion, it is to be included. Extra amenities. We'll make the garden, we'll make the jogging track, this thing, all thing. All these things are, in my opinion, it's like a common facility charges. It has to be included. Clubhouse charges. Clubhouse charge is nothing but a common facility. It has to be included for calculating the 45 lakhs rupees. Now come, certain builders give with the furniture, molded kitchen, this thing, that thing. Is it to be included in 45 lakhs rupees? In my view, no, because furniture is not part of a flat. It doesn't come under the construction services. Basically, whatever you are providing by a construction, that has to be included in that 45 lakhs rupees. But the furniture is not coming under the construction. So in my opinion, this is not to be calculated for calculating 45 lakh rupees. But yes, whatever furniture you are providing, that will be taxed at an applicable rate. The furniture rate is 18%, but you have to pay that 18%, but that will not be included in the value of a flat. So the value of the flat is not included. If less than 45 lakhs rupees, then you are paying the 1% tax only on that flat value. Then builder charges, the society formation charges, share capital contribution, advance maintenance, legal charges. All these charges have nothing to do with the construction services. It is post-construction. See, in my view, this is not to be included because it is not in the nature of development charges, parking charges, preferential location charges, common facility charges, etc. So it is not to be included for calculating the threshold exemption of 45 lakhs rupees. Friends, as I told, see, builder was selling the affordable house and charging 8% till 31/3/2019. Now, suddenly on 1st April 2019, cap of rupees 45 lakhs has come. The houses, see, the houses in the project does not fall under the definition because since it comes, it's more than 45 lakhs rupees, it does not fall under the definition of the residential affordable housing apartment. Whether the builder can opt for the new scheme of taxation at the rate of 1%. Friends, I have already told you, if you go to the definition of an affordable house, given in the notification, the definition has a two sub-clauses. Sub-clause A, which says, you have to have 60 square meter or 90 square meter, 45 lakh value. And second sub-clause, clause number B says, if you were earlier, affordable housing project mein aap the, and you are charging 8%, then even that can fall under the affordable apartment definition, and that should not be any issue in my opinion. That person can go for that 1% scheme. There is no issue on that. What will be the applicable tax rate for commercial apartment in the affordable housing project? Where the commercial area, see, is less than 15% of the total carpet area of the project. See, when I have told you, in a project where you are selling the affordable apartments, all your apartments are below 45 lakhs rupees. But you have a shops and office on the ground floor, but the total area of shops and office are less than 15%, So definitely entire project is treated as a residential project. But will that shop will go at a 1% or will it go at a 5%? Friends, the 1% rate is applicable to the affordable residential apartment. It does not apply to the commercial project. But there's a specific entry number 31B of the rate notification, which says a rate of such shop will be 5%, not 12%. Please understand. If you are in affordable housing project and 15% of the 15% area is for the shop, 15% less area is for the shop, then the rate of the shop, the GST rate for the shop is not 1%, is not 12%, but it is a 5% because of the specific rate entry. But what happens where the commercial area is more than 15% of the total carpet area of the project? In the means, after if the building is a composite building, and in that building, the 30% of area is commercial. For example, first 3 floors are commercial, and next 3 floors are say residential. So what will be the rate of that commercial this thing? As we have discussed earlier, the rate of the commercial premises will be 12%, definitely with ITC, and the residential flats will be at the 5% or 1%, depending on the depending on whether it's a affordable housing apartment or regular apartment. Now the important question comes: what will be the tax rate applicable on or after 1/4/2019 for a works contractor providing service in respect of an affordable housing apartments? See friends, I am charging 1% tax affordable housing apartment के ऊपर, and works contract services generally comes at 18%. But here in this case, if you are in that affordable, if you are selling your affordable apartment, whether the rate of tax will be 18 or it will be different. Friends, if you read the entry number 353 Roman 5A of the notification 11, it reads as under, I will just read for you. It is very important, very important. Composite supply of the works contract as defined under section 2119 of the CGST Act. Definitely my subcontractor is providing me the works contract services. Means I am the person, I am the builder who is constructing the affordable housing apartment, and my contractor is providing the works contract services because I have given him the contract with the material, so his works contract service, correct? So composite works contract supplied by way of a construction, definitely is constructing the building. My subcontractor is constructing the building. Construction of, I'm reading relevant portion only, construction of affordable residential apartments. Then the rate is 12%. So whether this residential affordable apartment rate of the builder is 1%, but the rate applicable to the works contractor is 12%. So I have seen many of the builders are paying the tax at the rate of 18% to the works contractor. So they are paying 6% more, and they are not getting ITC credit because it's 1% without ITC credit. So this is becoming unnecessary cost to the project, and it's a huge cost. It's a huge cost. So friend, you can take this and you can suggest your client, any works contractor doing the work for an affordable apartment, the rate of tax is a 12% and not 18. As generally the misconception is people are paying 18%. Now friends, as I have told you, there are two conditions for charging the concessional rate of tax of 5% or 1%. So one of the condition is non-availment of the ITC. This we already discussed, but I will just summarize very quickly. builder is not entitled to the ITC related to supply used in the construction services tax at 1%, 5%. You cannot take ITC credit. Even you are not entitled to utilize your ITC balance for discharging the tax liability. You might be having some other business जहाँ आपका ITC credit है, you cannot use that ITC credit, or you cannot use any ITC credit for discharging this tax liability 1%, 5%. Government wants it in the cash only. ITC not availed. See, please understand this. This is a very important compliance issue. With government saying okay, ITC is not available to you. So ITC is not availed shall be reported every month by reporting the same as a ineligible credit in GSTR 3B. It means आपके 2A में या 2B में that ITC will be reflected. So you have to, builder also have to reflect it in his return, and he has to show as a ineligible ITC in GSTR 3B. So please keep this thing in mind. And I have seen most of the clients, most of the chartered accountants are not doing this, because they generally now write off entire, the with ITC, the cost with, with tax only, they write to the purchase account, and they are not reflected in that particular 3B. But this is one of the condition which government says that you have to comply with. Builder to reverse. See this again, as I've told you, there will be ongoing project. So ongoing project, if you opted for 1% or 5%, so whatever ITC balance you are having as on 31st March 2019, you have to, work out ITC balance, work out the ITC, which will be related, which will be, which is, which is relatable to the future installments due from 1/4/2019. जिसके ऊपर आप you are paying 1% or 5% tax, so corresponding ITC has to be reversed. And entire formula, this is called, the transitional credit is to be reversed. An entire formula has been given in notification number 3. I don't want to take it now because it will take 2-3 hours for me to explain that formula. So I'm not going into that. Conceptually, आप समझ लो, whatever ITC balance was there as on 31/3/2019, and you have opted for the 1% scheme or 5% scheme because you are paying output tax at 1%, 5% on all installment which is due on or from 1/4/2019, you have to knock off the ITC credit relatable to it. And again, this reversal has to be worked out project wise. Please understand, you have to work out this project wise. And again, for considering the reversal, the transition credit also need to be taken into account, because in the service tax regime also you might have certain credits, and वो आपने transition credit में, you must have taken it. Trans 1 में आपने लिया होगा. Even that has to be taken. So one of the practical issue comes up that we have faced. कि my ITC, I have the common ledger, this thing. ITC is a common hodgepodge. And when I am transferring trans 1, so मेरा ITC of the transition credit, on which project I have to allocate. I think this is a big issue, because suppose in certain project, suppose I have 2 projects. On one project I am going for 1%, 5%. Other project I am going for 12%. So how I have to allocate the total my transition credit, which is pertaining to the means I have to work out some scientific basis, and I have to work out and allocate the transition credit between the 2 projects. And friends, the reversal, whatever credit you have taken, whatever credit you have to reverse, that reversal was to be done before September 2019, before the due date of filing September 2000 return. So that is, before 20th October 2019, in 30th September 2019 return, you should have done the reversal. You should have paid the tax if it is coming. If you, on the reversal, if there was, your tax was payable, you can pay it either through the ITC balance. If you are having the ITC balance, you can reverse the ITC, or you have to pay by the cash. I think this was the position as far as non-availment of ITC is concerned. Now, friends, very big issue, very, very big issue. Friends, you are aware, if you are not paying to your vendors within 180 days from the date of invoice, then you have to reverse the ITC. Take the case over here. Builder has reversed the ITC of rupees 1 crore before 31st March 2019 on account of the non-payment of tax to the vendors. And all these payments are made in a subsequent period, say in September 2019 or August 2019 or December 2019, etc. Then he's entitled to reclaim that ITC. But he has opted for 1% and 5% scheme. So what happens to it? Legal answer: you are not availing the new ITC. You are reclaiming the old ITC which you reverse. There is no ban on reclaiming. You can reclaim back in your electronic credit ledger because it is not an availment. See, 1% and 5% when you are taking, you cannot take the input tax credit. But it is not an input tax credit. This is a reclaiming of the input tax credit which you already reversed, where you are entitled for it because of some provision. You have reversed it and you are reclaiming it. But friend, the practical problem comes. This 1 crore rupees, builder will reclaim in his ITC return, in his 3B. But where he will utilize? Because now his output tax liability 1% and 5%, he has to pay in cash. So iska kahan utilize karega wo? Maybe some, if he's having some other business in the same entity where the output tax liability is there, you can utilize for payment of that. Earlier we used to tell in our seminar or our client, कि boss, यदि आपका कोई dispute चल रहा है, you have to pay the pre-deposit, you can pay out of that. But अभी now there is a Orissa High Court judgment which says the pre-deposit has to be paid in cash. It has not to be paid through the credit ledger. So that also now become a problem. But today is not, we are not discussing that subject. So I will not touch upon, I will not go into the detail. Or suppose, after completion of the project, you might do the possession. And possession ke time pe you will be collecting the advance maintenance and all the things. And if you are charging the tax on that, so this balance can be utilized for that. Or if you are, so these are the something, but please understand, you will not get the refund in the cash. So this is something the government has not made any provision. This was something, they have never thought of. And I have come across 2 or 3 cases where it has become big issue for us. Now let me give you example. Now this kind of show cause notice will come perhaps to the most of us now. What is that? I tell you. Builder has 2 projects. One ongoing project where he has opted for 12% scheme, normal scheme. Another is a new project where he is 5% concessional rate scheme. And what has happened by mistake? One of the small bill of new project has come on me and is reflected in my 3B also. And I have taken this in my ITC. Because I was under impression that bhai ye mera dusra project hai, uske lagta hoga, so I have taken that in my this thing. So then now issue comes up. I have taken the ITC relating to the project on which I am paying 5% tax. So mere ko show cause notice, how the show cause notice will come? Will they say, since you have taken the credit, so you pay the 12% tax on your collection. You have taken the credit, you have violated the condition, so you are not entitled to 5%, you pay the 12% tax. Suppose mera 100 crore ka receipt hai, sir. So I be told to pay differential tax of 7%, 5% मैंने pay किया, 12% tax, so 12%. Friends, this kind of show cause notice may come. But in my opinion, it is not correct because the law is very clear. Assessee has to opt for 5%, 1%. Once he has opted for it, his option cannot be changed. His option cannot be changed. neither by the assessee nor can by the department. If he has claimed the ITC erroneously, the so-called notice can only be for the reversal of that ITC. And there are n number of cases which says if ICT taken and if you reverse subsequently, it will tantamount as if you have not taken the ITC. So friends, you have to be very clear. Even if this kind of notice comes, and definitely it will come, I tell you. The department will say 100 crore का आपने, you made the sale, आपको 5% भरना था, आपने भर दिया, लेकिन you have not complied with the condition. आपने credit claim कर लिया है, तो rate of tax is not now 5%, it is 12% or maybe 18%. You pay the differential tax. Friends, I think legally they cannot do that because 5%, 1% option is there. So even the law says if you are not opted for any scheme, then also the 5%, 1% will be applicable to you. So in my opinion, there should not be any issue. The so-called notice should only be for the reversal of the ITC you have taken and at the most interest thereon. And maybe the penalty they may levy, but there cannot be the differential tax of 7% they cannot ask. Other condition is procurement from registered person. As I have told you, if you have gone for 1%, 5% scheme, then the developer have to broker the input and input services. 80% of the input and input services should be brokered from the registered person. And the notification says very clearly, for calculating the shortfall, following should be excluded. What is to be excluded? If you have paid for the development right, you exclude it. If you paid for a FSI, you exclude it. If you have paid for the long-term lease of land, you exclude it. It means land-related payment, if you have made, development right, FSI, leasehold land, don't count in that, procurement from unregistered person. In addition to that, diesel, petrol, natural gas, if you have taken, don't count it. And electricity, they have added one more thing. So basically, the products which are out of the GST net, petroleum products, that are not to be taken into account. Land related, because this, FSI, then your development right, and your long-term lease, don't take into account. And electricity, you don't take into account. In other words, entire profit and loss account, debit side, either it is, it's supply of service by somebody to you, or it's supply of goods. So does it mean that entire profit and loss account you have to consider, and you have to find, your bifurcate all your expenditure, this expenditure from registered or unregistered, then take the total and then find out if it is, if I have brokered from 80%. And again, please understand, this exercise has to be done project wise. Please understand, this exercise has to be done by the project wise. Abhi direct expense related to project, so you will get it. But what about the indirect expenses? Interest, then your printing and stationery, your staff welfare expenses, and all the things, So it is very cumbersome, very, very cumbersome. You have to work out project wise and financial year wise. If your project commences in between the year, then from that date to the end of the financial year, or if your project completed in between, then from the from the start date of the financial year to the completion of the project, you have to work out that way. So now after working out, you have to find out, it was out of my total procurement for this project, procurement of the services or goods. Capital goods they are not talking about. Input or input service only. So input and input services, if I have brokered total procurement is say in a financial year for one project is 500 rupees. And if I have procured 350 rupees from the registered person, and so 150 I have procured from the unregistered person, I am allowed, I am allowed up to 20%. So, about 20%, is not allowed. So as our example goes, 500 total procurement, 20% is allowed. So 400, minimum 400 I should have procured from the registered person. I have procured only 350 from the registered person. So 50 is a shortfall. In short, government tells me pay 18% tax on that. When you have to pay, that I will explain you. So this is what generally the formula, generally the way in which it has to be done. But friends, the law is very clear. If you are taking the cement, from an unregistered supplier, irrespective of the shortfall, cement from unregistered supplier, you have to pay under reverse charge, irrespective of the shortfall. And if you bought the capital goods from an unregistered person, then you have to pay the tax at an applicable rate under the reverse charge. And that other shortfall of input services, you have to pay the shortfall, developer has to pay shortfall under the reverse charge. Now let me come, as I have told you, builder has to maintain the project-wise account. It will be very, very difficult. And under the law, the builder shall submit the above details in a prescribed form electronically on the common portal by the end of the quarter, that is June, following the financial year. So first financial year is 1920. So the form was to be filed on 30th June 2020. Second, 30th June 2021. And third form is 30th June 2022. But the beauty is the form is not yet notified. अभी तक वो आया ही नहीं है form. So there is no default on our part, but please understand, when the form will come, you may have to file this form, giving the calculation for the 3 years. It will be a big, problem for the GST consultant as well as the officer who is working, officers, of the client's staff for working out this thing. And again, when it to be paid, tax liability on the shortfall of inward supplies from unregistered person, except cement and capital goods, because cement and capital goods you have to pay monthly. Every month you have to pay. If you have bought it from a registered person, you pay monthly. To be added to the output tax liability in the month of June following the end of financial year. So friends, 1920 ka you should have paid, work out the shortfall, and you should have paid before 30th June 2020. You should have paid for 21 also, and now abhi June jo gaya, you should have paid your tax by 20th of July. So friend, this is something, it's a very big thing. Now, it is a very messy thing to have it. Now let us come to the issue. Whether the following need to be considered for determining the shortfall of 20% in procurement of supply from registered person and RCM under 9(4) will be payable in respect of. See, I have given you 5-6 items. First is the salary and wages paid to the employees. Because salary and wages will always be to the unregistered person. Is it counted in that 20, in that, for calculating the shortfall? Procurement of water or other goods leviable to nil rate. Because pani bhi, लगता है project के लिए, the pani is nil rated. Loose water is nil rated. Whether it to be included. Interest on loan. Most of the builders, especially, working in a partnership firm or LLP or in a proprietary concern, they have a huge interest liability. And that may be from a registered person. The loan may be from a non-GST registered person. Whether that has to be included. Interest-free loans from related parties, from family members, etc. Interest-free loans, please understand, any related party transaction done without consideration is also a supply. So these are all related party from which I have taken the loan. So whether the interest which I have interest fee loan hai, will be the notional interest, will it be added to this? When you are doing the society redevelopment, you are paying hardship allowance, compensation, shifting allowance, rent, corpus, etc. Society members were unregistered. Whether this is to be calculated, whether it to be taken into account, and you make lot of payment, statutory payments made to MCGM. Friends, I don't have the time, so I will be very brief in giving my answer because now I have only 17 or 18 minutes and I have to cover another 7-8 slides. So I will be brief in answer. Let me divide these things into 3 parts. The first part is items which are excluded by the notification itself, correct? So that is not to be included. All these things, development right, high-speed diesel, electricity, long-term lease, motor speed, etc., is not to be included either in denominator also and in the numerator also. That is very clear for working out the shortfall. Then there is another category, something which is not a supply at all. Something which is not a supply at all. For example, salary and wages paid to the employees. It is not a supply under Schedule 3 because Schedule 3 says okay, any service provided by the employee to the employer is neither the supply of goods nor supply of services. So it is not a supply. And again, the statutory payment made to MCGM because MCGM charge you premium. MCGM charge you for the premium and anything. And most of the corporations are not registered for GST. I am just presuming that if they are not registered for the GST, then whether this premium and all the thing it will be calculated. See, there is a notification in 2018. I have 68 number notification is there, correct? 68 by 2018. This says yeah. Sorry, friends, you have to. Notification number 16 by 2018. See, please understand, salary and wages is not a supply. This statutory payments made to the MCGM, this premium and all the things, that is also not a supply because notification number 16 by 2018 says any activity carried in relation to the function entrusted to municipality under Article 243W of Constitution is not a supply at all. So Article 243W leads you to the Schedule 12 of the Constitution, and Schedule 12 says that any payment made means Schedule 12 says the regulation of the land usage and constructions is a function which is entrusted to the municipality, and this premium and all the things are collected from you under the development control rules. So it is a basically constitutional duty. So it is not a supply at all. So we have out of this list we have 2 non-supplies. Means it is not a supply at all. So in my view, something which is not a supply, it is not to be included. It is not to be included in the numerator. ऊपर अपने को include नहीं करना है. Means for calculating 80%, you don't take it up करके, and in the numerator you have to include it because you have to include. Basically, you are not to include both the places in numerator and both the place you are not to include. Second thing, procurement of water. Water is an exempt supply. Nil rated supply, exempt supply. Interest on loan, it is an exempt supply. Similarly, interest in loan, even if it is notional interest, it is an exempt supply. And sorry, I have forgotten. Hardship allowance, compensation, shifting allowance, rent, purpose, etc. Is it a supply at the first place? Supply is defined to mean any activity done for consideration in course or furtherance of a business, the society members or the property owner generally get the house rent allowance, compensation, shifting allowance, rent, etc. They are not carrying. This is not. They are not receiving in course or furtherance of a business. So, in my opinion, it is also not a supply. So, salary wage is not supply, hardship allowance, etc. is not supply, and statutory payment made not to supply. So, that is not to be included for calculating the threshold of this, shortfall of 20%. What about the exempt supply? In my opinion, exempt supply is to be included for calculating the shortfall of the 20%. But for paying the tax, because the tax is under the reverse charge, under 9(4), and 9(4) says the tax has to be paid out. Tax has to be paid by the payee. I would read the exact word of the 9(4). Time thoda short hai, but section 9(4) says, where the reverse charge is applicable, all provisions of this act shall apply to such recipient. Such recipient means, in our case, developer, as if he is the person liable for paying the tax in relation to such supply goods or services. It means, if it would not have been reverse charge, it would have been straight charge. Whether the person supplying such services would have paid the tax, he would not have paid the tax because there is specific exemption. So I am just stepping in the shoes of him for discharging the liability. If there is an exemption, why should I pay the tax on that? Because if there is an exemption, there is no charge. So there should not be reverse charge. This is my view, friends. So this will be a big challenge for all of us. Now, as I have told you, amount paid under C. You worked out the amount paid under RCM, you paid 1.21 lakhs. When the auditor comes, GST auditor comes, he said, no, 1.22 nahi, 1.22 भरना था आपको. आपने 1000 कम भरा है. So can he issue the show cause notice for 1000 only, along with the interest and penalty? Or he can say, no, you have not complied with one of the substantial condition for claiming 5%, 1%. So play the balance of 7% tax करके. I think I have already given you the reply in my earlier case study. So the reply is similar. They cannot do. They have to do the so cause only for 1000 rupees, and I have to pay the shortfall of 1000 rupees, and I have complied with the provisions. Friends, I am leaving this ITC reversal because I have 15 minutes now left, 10-15 minutes left. So I would like to do the taxability of the development rights and the lease rights after 1/4/2019. Is any organizer is there here? Hello?
Yes, sir. Tell me.
Only my see, I have now 10 minutes left. So is it okay? I take 5-7 minutes more, 10 minutes more, or it is
Yeah, sir. Yes, sir. Please.
So am I at what up to what time I should go? In that case, you just tell me. No, so I will.
7:10, sir. By 7:10 till 7:10 you can carry on.
Okay, fine. Thank you for granting me the extension. Yeah. So now, please read the title of the slide: Transfer of Development Right, TDR, FSI, leasehold rights, on or after 1/4/2019. Please understand, this applies only to the development, this particular TDR, development right, FSI, lease right transferred on or after 1/4/2019. So it does not apply to all the agreements done before 31/3/2019. The old law would have applied. So please understand, keep this thing in mind. And I am talking of transfer for the construction of a residential apartment only. TDR, development right, FSI, leasehold right in respect of the residential apartments. So number first, taxability. The basic issue is whether the development right is taxable or not. Still, there is a big dispute going on. The one school of thought is that a development right is nothing but a land itself. Development right, FSI, TDR, leasehold right is nothing but it is land per se. And since the land is not liable to GST, all the things are not liable to GST. That is what one school of thought is. The other school of thoughts, and I fall in the other school of thoughts, the government is very clearly saying all transaction, either it is goods or it is service. And they've said that what is excluded, what is not supply of goods or service, they've given the schedule 3. And in the schedule 3, they've said the sale of land is neither the supply of goods nor the supply of services. It means the government is very clear that when you sell the land, only at that time, only that is not liable to GST, that is out of the scope of GST, but development rights, TDR, FSI or leasehold rights are not land per se. It is your right in the land. And the land is a bundle of rights. Apart from that, they have many other land property owners, many other rights in the land. So if he gives one of the right, like development right or leasehold right or FSI, he is not transferring you, he is not selling you the land. So it does not go out of the GST net. I think this is the true view, and I am presuming that I am going on the presumption that development right is taxable. Then only all these slides will make the sense. Otherwise, development right is not taxable. There is no need to discuss all these things. So let us presume that development right is taxable and go ahead. So whether development rights in respect of the residential apartment, is it taxable? In my view, first it is leviable to tax. However, there is an exemption has been granted in the notification 3 itself. Development right, TDR, FSI lease used for sale of under construction flat residential unit is exempt. So whatever TDR, development right, FSI, leasehold rights attributable to under construction sale of flat, it is exempted. So by implication, what is taxable? The taxable only those development rights, FSI, TDR, leasehold rents, which is relatable to or which is attributable to unsold flat as on the date of completion of the project or OC date, only that is taxable. The government principle is very simple. That if you are paying the tax under 5% construction or 1%, you are paying the tax. उसके सामने का जो भी development right है, we are exempting it. But the units which you are selling post OC, on which you are not paying any tax, तो उसके सामने का development right is not exempted. I think this is the concept that you have to keep in mind. So please understand, development rights are exempted provided it is used for the under construction residential unit. Suppose आपका 1 lakh आपने development, you have 1 lakh FSI. Out of that 80,000 square feet, 80,000 FSI is used for flats under construction. Then balance 20,000 square feet of balance 20,000 FSI, which is used for unsold flat or which might be used for commercial units, that will be liable to GST. Am I clear on this? Yes. So taxability aspect is clear. In my view, it is taxable, subject to the exemption given. Secondly, the payment of tax. If it is taxable, when the payment is to be made, and by whom it is to be made. Please understand. Let me first come to the payment. Whom the payment is to be made? The law says very clearly, from 1/4/2019, any development right, FSI, TDR, leasehold right transferred after 1/4/2019, the payment tax liability, if it comes, it has to be paid by the developer under the reverse charge. It means the owner is now relieved from discharging the GST liability on the development rights, if any, whether the development rights may be commercial development rights, commercial complex के लिए और residential complex के लिए. Landowner have not to bother about the, the liability in respect of the development right. When it is to be paid? It is to be paid on the completion of the project. Completion, when you get completion certificate or you get a first occupation certificate. Why this is so? Because on that day only you will know how much FSI is consumed for the under construction property and how much it will be there for the the post completed flat ke liye. So the government has been kind enough to tell you that you pay the tax only on the completion of the project. And please understand, generally, this kind of payments can be area sharing. There could be area sharing arrangement between the landowner and you, landowner and developer. There could be revenue sharing arrangement, or there could be outright purchase of development right, TDR, FSI, lease, etc. So in all the cases, tax has to be paid. Tax has to be paid on the completion of the project. Person liable to pay the tax. As I have told you, it will be the developer has to pay the tax. Whether you will get ITC credit or not. If new scheme is there, 1%, 5%, you will not get the ITC credit. But it is possible that after 1/4/2019, you might have acquired the TDR, etc. for your ongoing project, for which you opted for 12% or 8% scheme. You can take the ITC. Payment तो आपको ही करना है reverse charge में, developer को ही करना है. Because anything acquired after 1/4/2019, the liability is on the developer. And developer, if he pays, suppose if you purchase from the open market, he has to pay the tax and he can take the credit provided he is gone for the 12% scheme. Now, tax on the transfer of TDR. Now, as I have told you, that TDR, development right, FSI, lease or pertaining to unsold flats is taxable. Please understand, there is a big conceptual, misunderstanding that there is now 5% tax on unsold flat also. No, it is not tax on unsold flat. Basically, it is a tax on, the development rights attributable to unsold flat. And वो कैसे निकालने का? I will tell you. You have to work out. Government has given two things. You have to pay lower of that. Lower of that will be the tax that you have to pay the under reverse charge for the development rights attributable to the unsold flat. First, you have to work out what is the value of TDR, development right, TDR, FSI attributable to the unsold flat. Value कैसे निकालोगे? Because see, come to the asterisk portion. If you purchase outright, TDR आपने outright करते, FSI outright purchase किया है, so that monetary value you will have. If you have done the revenue share with the project, with the landowner, whatever revenue share you have paid to the landowner, that will be the monetary consideration. That also you have to add up. And in case you have done the area sharing, if you have done the area sharing, if you have given 30,000 square feet to the landowner, so 30,000 square feet into, suppose the first agreement, sale agreement, you have done it, say 15,000 rupees. Then 30,000 into 15,000 rupees, so 45 crore rupees or 4.5 crore, what it may be. That is the value of a development right. This is the value of a development right for entire project. Suppose the project is 1 lakh square feet. So it is subject the total value comes, all this value comes, say 5 crore rupees. 5 crore for 1 lakh. So if your 20% area is unsold, then 1 crore rupees is the value of the TDR attributable to unsold area, and the tax rate is 18%. Tax rate is 18%. So 18 lakhs rupees. That is one calculation. then you work out if the 20% area is unsold, and if my value of the flat, if I've sold any flat near to the date of OC, I have to take that rate, multiply by the unsold area. That will be the value of the unsold flat, and uske upar 5% I have to calculate. And that 5%, if it is lower than what I have calculated earlier, I have to pay the tax on that amount. Generally, the 5% on the value of unsold flat will generally be lower than the 18% of the value of the TDR, etc. you have bought it. I think this is what the formula. So the 5% tax is not on unsold flat. It is a tax on the development rights attributable to unsold area, and it is only valued in this manner. So I think this is how, but you have to pay under the RCM on the completion of the project. Now I am coming to the commercial. This was for the residential. Commercial, is it taxable? Yes, it is taxable. When you have to pay, when you are purchasing outright, you have to pay the tax on the same day, which not under the reverse charge. Suppose if you purchase development right today, or FSI today, or leasehold premium today, then for the month of July, if you are filing the return on the 20th of August, you have to pay the tax under RCM. Only in case of area sharing. Only on area sharing. Suppose आपने joint development agreement किया हुआ है, landlord has given you the development right, again the flat to be allotted to him. So they say in that case, on the case of only area sharing, you have to pay the tax on the completion of the project. In case of a revenue sharing for a commercial properties, JDA project, the big controversy is whether the landowner had transferred the development right on the first day itself when he signed the agreement. Is it the date of time of supply, or when I'm paying the revenue share? At that time I have to pay. Friends, there is no clarity on that, but all practical purpose, people are paying as and when the revenue share is paid on that, because if you want to pay on the first day, you don't know what amount revenue share you will pay to the landowner. So practically, when you are paying the revenue share, at that time you are doing, who is person liable to pay the tax? Even in this case, only the developer has to pay under the RCM. And ITC availability, yes, ITC will be available without any issue. So ITC is available. So now I'm telling you what is the tax implication of a developer selling TDR to the trader. Suppose I am a SRA developer and I am generating the TDR. And if I am generating the TDR, I am selling to the trader. What is the tax implication? Friends, the law says if you are selling the TDR to another developer, or promoter developer, then the tax has to be paid under reverse charge by the developer. But here you are selling the TDR to the trader, who is not a developer registered under the RERA. So in that case, you as a generator of the TDR, will have to pay the tax under the forward charge. Suppose आपने 1 करोड़ का TDR बेचा, तो 18 lakhs rupees you have to pay to the government, and you have to collect from 1 crore 18 from the trader. And now what the trader does? The trader sells it to another developer. So once trader sells to another developer, that developer has to pay the tax under reverse charge. So please understand, the trader will have 18 lakhs rupees of the ITC in his books of accounts, and on output there is no tax at all. So whether this 18 lakhs will become the cost to him, it's a big issue as far as the trading of TDR is concerned. This is one of the issues that I wanted to draw your attention. It is one more question, whether developer is liable to discharge the GST under reverse charge on the premium paid to municipal corporation for additional FSI or incentive FSI. We have received the so-called notice for this also. They say, if you have taken the FSI, incentive FSI or premium FSI from the municipal corporation, any payment, first so it is a purchase of FSI in TDR. And secondly, any payment to the municipal corporation or government by a business entity is liable to tax under reverse charge. तो आप इसमें हमको रिवर्स चार्ज में पैसा भरो. Friends, I have already referred to you that notification 16/2018, which says any services provided by the municipal corporation pursuant to its constitution duty casted on him under the Article 243W of the Constitution is neither a supply of goods nor a supply of services. And Schedule 12 and 234, 240W takes you to the Schedule 12 of the Constitution. And in the Schedule 12, there's a word in this Schedule 12, the regulation of land use and regulation of the construction, that is the duty casted on the municipal corporation by the contribution under 243W. So in that case, this premium is charged to me pursuant to the development control rules for the statutory duty of the municipal corporation. So it is not a supply at all. When there is no charge, there cannot be a reverse charge. So in my opinion, there is no issue on that. And now I have only 1 minute. I will take the last particular, the issue. What are the Gst implications when the balance leasehold rights are assigned to the buyer of an involved property on leasehold land? Friend, this is very common. And in the Navi Mumbai, in the Panvel, Raigad, the Rabale, etc., all these things, Kalamboli, where the land belongs to the land belongs to the MIDC. MIDC has leased out the land to the factory owners, and now these factory owners are selling this land to the developers for constructing the commercial apartment or the Infotech park, etc., 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 or the warehouses, etc. But in this case, both the party have to go to the MIDC and get the balance lease period transferred from assigner, the original person, to the person who is buying the factory and land. So friend, here the transaction is basically whether it is an assignment of the lease, whether the assignment of a lease, is it liable to GST? That is a very, very big issue. See, what is excluded is only the transfer of a land, and only owner of the land can transfer the land. Here the ownership of land remains with the MIDC only. What the assigner is doing, assigner says whatever leasehold rights were in my name, suppose lease was over 99 years, I have used it for 39 years, now balance 60 years lease, you transfer it to the purchaser. And what I am getting the consideration, what the assigner getting the consideration is for assignment of the lease rights. So it is not for the sale of a land. So whether it is taxable or not, the issue, the view is the assignment of lease right, it is taxable. If you go by the strict literal interpretation, it is taxable. Is it unfair? Yeah, it is unfair. But if you go by the strict interpretation of the law, it is taxable. Unfortunately, if it is taxable, who will pay the tax? Whether the developer will pay under reverse charge, or whether the person who is assigning will pay. Please understand, the reverse charge applies only when the leasehold rights are granted. When the owner grants the leasehold right to you, at that time the reverse charge applies to the developer. This is not basically the grant of the leasehold right. It is only assignment of the leasehold right. Friends, I'm afraid that GST perhaps is may have to be paid by the assigner on the forward charge. I think, friends, I have so many things to discuss with you, but time is very short. So only with one small thing I will take it up. Only 1 minute I will take. See, generally the question comes to us in case of a society redevelopment. The builder pays house rent allowance, shifting allowance, corpus, etc. to the members of the society, and whether it is liable to GST or not. And if liable, who is liable to pay it? This is the first one question that regularly comes. So let me tell you, friends, definition of supply is very clear. Taxable event is supply. Definition of supply is very clear. Supply means any sale, exchange, barter, falana, digna, etc. done for consideration in course or furtherance of a business. If a transaction is not in course of furtherance of a business by the person who is receiving the consideration, it is not a supply at all. So there is no question. If there is no supply, there is no charge. If there is no charge, there cannot be, if there is no charge, there is no tax on that. And again, the reverse charge is not prescribed on that. This item doesn't come under reverse charge because it is not for the development right. It is not for development right. It is for the house rent allowance, purpose, shifting, etc. So it doesn't come under reverse charge in the hands of the developer. So developer need not worry. And as far as the society members are concerned, they are not doing in course of furtherance of business. So they are also not liable to pay the tax on that. Only one precaution we have to take. If in the society there are commercial offices or the shops, and if they are getting these things, they may have to ask their consultant whether it is liable to tax or not. In my opinion, it might be liable to tax if the recipient is having another services, or only with this compensation and other services. If it exceeds other supply, if it exceeds 20 lakhs rupees, he might be required to register himself and pay the tax. Friends, with this, I have tried my best to cover whatever I can cover within the period of within the time allotted to me. Thank you very much, and I hand over the proceedings to the organizer.
Thank you very much, sir. Now coming to official vote of thanks to you, sir. You have covered the topic very lucid in a very simple manner, sir. And the judgments, Safari Retreat judgments.
हेलो
Yeah.
हेलो सर, क्वेश्चन है दो चार नहीं, थोड़ा ज्यादा है, एक बार देख लीजिए सर.
Sorry.
मुझे वांदा नहीं है. आप ऑर्गेनाइजर को वांदा नहीं तो मुझे वांदा नहीं है दोस्त.
ओके सर.
क्वेश्चंस किधर है सर?
है मैं दे रहा हूँ सर.
मुझे स्क्रीन में दिखाई नहीं दे रहा इधर
अभी.
मतलब वीडियो करिए मैं मारो आप बंद करना शेयरिंग.
सर क्वेश्चन नरेश सर.
हाँ जी, 1 मिनट. आप बोलिए जरा, क्योंकि आई एम नॉट वेरी savvy with the technology. What are the questions? Yeah.
If we the first question is, if we claim ITC but don't utilize, but sir, after a few years, what to do of those ITC if all sales is done till that time? I guess this was the question for the utilization.
या नहीं फ्रेंड, आप किसकी बात कर रहे हो? देखो, मैंने जो बात किया था, that was for the construction of a hotel, construction of a it was basically on the safari retreat. In case of a I'm restricting my answer to only to that karke. So in my view, please understand, when you are constructing the mall or hotels, when you are constructing the malls or hotels, etc., your revenue will start within 2-3 years. आपका rent आएगा, that is liable to GST. All the things will be liable to GST. You can utilize that ITC for that output liability. So, their ITC will not go waste. That is what my answer is. Am I clear? Am I clear?
Yes, sir. Yes, sir.
Yeah.
Can I go for next question, sir?
Yeah, please, you carry on,
What is the GST implication in redevelopment case? When can you scroll down? भैया जो आंसर है ये क्वेश्चन नीचे scroll down कीजिए ना, मेरे यहाँ से नहीं हो रहा है.
मेरे से भी नहीं हो रहा है.
Okay, I will take a third question in the meantime.
Then I can, what is the GST implication in the redevelopment case when the flats are provided to the original tenants?
To original tenants.
Friends, see, I was about to take this slide, but not there. Give me. Is it okay? I take 2-3 minutes on this.
Yeah.
See, there is basically if you are providing the flat to the not only to the tenants, to the society members or to the original holder, these are called flats, rehabilitation flats. We have the decision of Hyderabad Tribunal in case of a Vasanta Green project, where the Vasanta Green project is the tribunal has held, okay, whatever flats are allotted to the flats are allotted, the cost of the value of that flat is factored in the sale value of the flat. Whatever you spend the cost on that, you are recovering it from the sale value of the flat. In fact, while paying the tax on the under construction sellable flats, that includes the value of indirectly the value of the REA flats also. So you are paying the tax on all the flats constructed by you. So there is no question of your paying the tax again on the REA flats. This is what the matter is. Basically, this matter is before the Honorable Supreme Court. SLP has been filed in case of a Vasanta Green project by the Supreme Court. Supreme Court has admitted the SLP, but Supreme Court has not stayed the order of the Vasanta Green projects. So we will not know the real legal position till the Supreme Court decides on this. But in my view, if you are going by my view, I am very clear. See, I don't know what the Honorable Supreme Court will come out with. But here there are, basically it's a barter. It's a barter. Tenants give you tenancy right, owner gives you the development right, and in turn you are giving the construction services. So in GST, the barter is also taxable. So in my opinion, that barter will be taxable. And if you go by the notification number 3, and notification 3 is, basically notification 3 is it's not challenged till date in any of the court. And by assuming that the notification is valid and subsisting, then in that case, whatever area that you allotted to the tenant, you have to take the, suppose you allotted 10,000 square feet to the tenant, and the first sale agreement you made for say 20,000 rupees per square feet, then whatever 20 crore or 200 crore, whatever it comes, uske upar 5% tax will be payable by the developer, and that tax will be payable on the completion of the project. But we have to wait for the Vasanta Green project. If Honorable Supreme Court says there is no tax on the REA, then there will not be any tax. Okay? Otherwise, if I were to take call on today, I will always take the call that it is liable to GST. You have to provide, you have to factor either in your cost of project, or you have to factor it in the agreement which you enter into with the landowner or with the society or with the tenant. If liability comes, who will bear it? I think, am I clear in my answer?
Yes, sir. Third question. What would be tax implication when builder sells few flats as affordable house at 1%, but during construction flat rates increase beyond 45 lakhs? And what will be the GST implication for those flats already sold?
Friends, if you see now, notification number 3 is very clear on this. Whatever 45 lakhs, see, if you started given when you are giving the award to the labor, where you are giving the एक बेटा नहीं see, hello, I am sorry, you are saying I am sorry.
पहले 45 lakhs था, बाद में rate increase कर.
So whatever you said for 45 lakhs rupees, that will be taxable at 1%, and whatever you are selling beyond 45 lakhs rupees, it will be 5%. Subsequently, you know, see, जो भी आपने 45 lakh के नीचे बेच दिया है, वो तो 1% रहेगा. That is, you are not to pay any difference, etc. Hello, you get my point? Hello.
Yes,
the tax is pursuant to the apartment you have sold. If your apartment is less than 60 square meter, and if you sold for less than 45 lakhs rupees, the tax is 1%. And after few days, if you are selling your next flat, it's for 48 lakhs rupees. So you have to pay tax of 1% on that 48 lakh rupees. But another earlier flat you have sold, it has no adjustment has to be done in this regard. Okay.
Yes, sir. Yes, sir.
Yeah.
Can we go? In case a builder has opted for new GST regime post 1st April 19, whether the ITC accumulated prior to 31st March 19 will lapse entirely. Any solution to protect the same? In such case, ITC is available for set off. Whether there is any restriction in respect of utilization, please advise. No.
See, please understand one thing. If you opted for the conceptual scheme, I already dealt with in my lecture that they have given the formula under notification number 3. The conceptually formula like this, कि whatever ITC पूरे प्रोजेक्ट का आपने जितना भी ITC क्लेम किया है, including the transition ITC, you have to take that, and then you have to estimate what is the installment that are due to me on or after 1/4/2019, and some formula is given. So whatever is attributable to the flats you are going to sell after 31/3/2019, to that extent your ITC you have to knock off, and you have to reverse it by September 2019 only. And उसके बाद में आपका बैलेंस ITC रहता है by chance. उसके बाद आपका बैलेंस ITC रहता है. Yes, I have told you that balance ITC you can use it for any other your liability except the payment of the flat का liability 1%, 5% you cannot use it. But suppose आप advance maintenance के ऊपर लेते हो, so you can utilize that. Suppose आपका कोई जूना dispute आया, तो pre-deposit of the tax, though the department says the GST cannot be discharged from your ITC ledger balance, but still many of the states, the tribunal or CC appeal accepts the pre-deposit from the ITC balance. So you can use that ITC for that. Or if you are having some other business, जिसमें आपका output tax liability है in the same company or same entity, you can use that ITC. Yeah.
Yes, sir. The next is what would be GST implication? I guess this you have already covered. GST implication for redevelopment project. We can go for the next, right? Even that 6th one is covered. What would be the tax implication when builder sells few flats at affordable, but during construction flat rates? This we have already covered, sir. Right? I will go on, sir. What shall be the definition of works contract? Who can charge 12% for RREP project? I guess this also you have covered, no? Works contract wala case.
What shall be the definition of works contract? Who can charge 12%? नहीं, for RREP project. नहीं, RREP project जो है, this is not for RREP project. You are talking of an affordable housing project. It is basically affordable housing project. I think I will skip this question because it's too long to explain. Yeah. Yeah,
and I guess you have already covered this.
Yeah.
Builder has entered into development agreement, money plus area sharing, with unregistered landowner in November 16. No further question. Someone is asking. So I guess we will skip this also.
Yeah.
The question is not clear.
Yeah.
Sanctioning earthworks started in 2021. So builder opted for new scheme. The questions are incomplete.
The question is whether. I don't know what is question. Yeah.
Yeah, question is whether GST payable on development right transferred and construction service provided. This also you have covered in your whole topic.
Yeah, I have covered.
Who will pay, owner or builder? This also you have covered.
Yeah.
1 minute. Okay. I'm not able to see the question properly. I guess most of the questions you have covered.
Yeah, देखो municipal corporation में also question I have covered. Hello.
Yes, yes.
Yeah.
I guess the time of supply, even the last question or everything you have covered it.
Yeah.
Yes. Hello.
हाँ जी.
So we can end up, no sir, now.
Yeah, you
Almost.
can end up, and if you see, let me tell you, this particular subject, even 8 hours are less करके,
Less, yes sir, I can understand.
So we should have a separate topic by joint development. Yeah, we have to see, then only somebody can do the justice. I have tried my best, with the limited time, correct? But physically,
Sir, it was most best session, and I guess it will help all of us, whoever is the participant. It has added to their knowledge, and you have covered almost 99.99% of the real estate sector in today's in your talk. So now
yeah,
it's our duty to present you a hearty vote of thanks. Sir, thank you very much for your valuable time. And the project and the presentation was really very nice, and you explained in a simple language. So thank you very much on behalf of WIRC. I thank you, sir, for giving your valuable time.
Yeah, only thing my request to you would be this particular PPT I have shared with you. You can share it with the participants. I don't have any issue. Huh? Yeah.
Okay.
It is.
Okay,
if
sir.
it is helpful to the participant.
Thank you. Thank you very much, sir. Thank you very much.
Okay. Bye. Thank you.
Yeah. Bye. Thank you.